Really, my purpose here is to come listen to you, see what questions you have. We can have a nice interactive dialogue. I hope you have some nice provocative questions. I'll try to answer most of them. If not, I have my colleagues here. They'll answer the rest. But I thought I'd start by just talking a little bit about us at Citi, talking about what we're seeing around the world, what some of the questions are that are still ahead of us. We have been proud to be in Russia since 1917, on and off. Last incarnation, we came back in 1993. We started with 30 people. We have about 3,000 people right now. We have 59 retail branches around Russia. We are, by profits, the 4th largest bank. By revenues, the 10th largest bank. I prefer the profit ranking rather than revenue ranking, as you all will, as you learn more about business. But it's an important part of Citi. Important because our entire enterprise is dependent upon what we do in connecting countries. We are in 109 countries. And by the way, we talked about Russia in 1917. We were in Mexico City, Manila, Yokohama, Shanghai, Calcutta for more than 100 years. And this was, I mean, you're talking about the emerging markets now, and this is before it was fashionable to be in the emerging markets. Citi was in the emerging markets, and our entire business model is around bringing the world to our clients and are bringing our clients to the world. And so we are a big proponent of globalization as being exactly the right model. And there's nothing I've heard today at the forum that suggests anything other than a complete commitment to the gains that come from having countries trade with each other and capital flows go back and forth, which is good for us because that's at the heart of our business model. It's clearly been one of the most challenging environments, one of those things that is not in any textbook. The solutions that have been employed are not in any textbook as well. There is no owner's manual for what we're going through here in this economy. The challenges are not only once in 100-year challenges, but there are some very significant issues that we have to deal with. Obviously, the governments around the world came together very well to make sure that they put enough spending, money supply, banking support in place to create some sense of stability right now. And that was really critical. It was very critical to have them act as fast as they did. I think they've done a great job. They've done a great job of creating some sense of stability in the system. But the problems that we're going to have to deal with are quite substantial. If you look back over the last 5, 7, 10 years, in our view, there were really 2 engines of growth for the world. The first was the US consumer. They bought everything in sight. Okay. Not only that, they borrowed money to buy everything in sight, which brings me to the second engine of growth, which was credit creation in the West. What drove both of those was the China's coming into the market, the India's coming into the market, and it was their savings from foreign exchange that drove the credit creation and drove the consumption. It doesn't matter, but the fact is there were 2 engines of growth, the US consumer and credit creation. Guess what? Both of those engines are gone. We don't have those engines of growth. So we have a world that was built on a business model of these 2 engines driving growth the last 10 years. We have to move to another business model as a world, not fully knowing what that business model is. So this is not like any other crisis. It's not only a crisis in terms of consumption going down. Of course, the banks were over-levered. There was a lot of leverage in the system because of credit creation, so it is a deleveraging story. But all of those you can handle if you know the business model here is the same as the business model here. That's not the case, which makes this very difficult. Because not only do we have to do with the deleveraging, not only do we have to deal with the fact that there is a recession going on, but we also have to reinvent a business model for the world from here to there. That makes it difficult, which is why the actions that have been taken around the world have been so unprecedented by central banks, by policymakers, whether it's in the form of fiscal spending and stimulus or it's in money supply. It's investments in banks, it's equity, it's funding, it's liquidity. They are unusual to recognizing the challenges, because what you don't want is when you go from one business model to other, you don't want to take a path that is extremely bad. And so all the measures that have been taken in the world, I call path control. How do you get from here to there, and how do you do that in the least cost possible way? So we've experienced a bunch of path control, and it's working. That's the good news. The good news is that path control is starting to work. The really bad scenarios, we believe, are not as likely as they used to be, which is going to give us all time to think about the business model of the future. You're starting to see some signs of stability. I'll be the first one to say it's too early to say stability is here. Therefore, we have to remain cautious, but I like what I'm seeing. And on the basis of what we're seeing, it feels like by the end of this year, at least in the US, we'll start getting some stability. But then that opens up a whole lot of questions, because stability is only step one. Step two is about what happens from there on. And to me, there are a few questions that are important. The first one is, what kind of recovery is this going to be? Okay. The second question, to me, is what's going to happen to companies and credit creation and those kind of things. The third question is going to be, what are we going to do about making sure this doesn't happen again? Because when you develop a new model, you better make sure it's built on a good foundation. And the last point, which is really important, is that in order to get through all of this, we've had to spend a lot of money. I mean, collectively, all of us around the world, citizens of the world, have taken on debt by spending, fiscal policy, et cetera. We've taken on a lot of debt around the world, more in the West than in Russia or in the emerging market. We've taken a lot of debt. How are we going to pay that back? And the related question to that, what's the business model of the future? Let's talk about some of these. Okay, the first one, recovery. Our view is it's a modest recovery. It's a recovery that is not built on a solid new business model. It's a recovery that's built on things that have stabilized. You can't go any lower, but you'll have some upticks. Some of the confidence will start coming back. You'll have some recovery. We expect a moderate recovery for a period of time. This could take a while. On the concept of credit creation, this is really interesting because, as I talked about, one of the engines of growth was credit creation. Now, I'm going to share with you something that's probably more specific to the US, the UK, Western Europe, maybe Australia, some of these other markets. Not something you see in Russia or you see in other emerging markets for that matter, and that's what I call a shadow banking system. Over the last 5-7 years, credit creation, loans, did not only come from banks. As a matter of fact, banks accounted for probably less than half of the credit creation. There was a shadow banking system, not based on deposits, not banks, that accounted for more than half of the credit creation that happened in the US. Big part in the UK as well. These were things like securitizations, finance companies, et cetera. If you know something about securitizations, you know those markets are shut. So we have a real issue. Half the engine of credit creation is gone, which is another reason why the recovery is going to be modest, which is another reason why we're going to have to think through exactly how are we going to start creating the amount of credit, how do we get banks to lend more over time. This is an important issue because the recovery that we're going to talk about is going to be dependent on the amount of credit that can be created, and there are not enough deposits in the world to create the amount of credit the world needs to go forward. On the question of governance and what is the financial architecture going to look like, what's the regulatory system, we have a lot of work to do.